Unlocking your financial future passive income in 2025. Welcome back to the channel. Today, we're diving into the top passive income ideas that actually work in 2025. If you're looking to make money while you sleep, or at least make money with a lot less active daily effort after an initial setup, then you absolutely need to stay tuned. So many people dream about passive income, that idea of your money working for you instead of you constantly trading your time for dollars. It's a powerful concept, and frankly, in today's economy, building multiple income streams, especially passive ones, isn't just a luxury, it's becoming a necessity for true financial security and freedom. Now, let's be real clear up front. Passive doesn't mean no work ever. Almost all of these strategies require significant effort to get started, whether that's an investment of time, money, or both. But the beauty is, once they're up and running, they can generate income with substantially less ongoing maintenance than a traditional 9-to-5 job. We're talking about building assets that pay you back over and over again. Think of it like planting a tree. You water it and care for it initially, and then it bears fruit for years to come. That's the goal here, to plant some financial trees. Today, I'm going to break down 5 of the most promising and, in my opinion, most realistic passive income avenues you should be considering as we head into 2025. We'll go through what they are, how they work, the potential upsides, and importantly, the potential downsides or challenges you need to be aware of. No sugarcoating here, just the straight goods to help you make informed decisions. So grab a coffee, get comfortable, and let's explore how you can start building your passive income portfolio. Dividend stocks, your slice of company profits. All right, so first up on our list, and it's a classic for a reason, is dividend stocks. Now, for anyone new to this, investing in dividend stocks means you're buying shares in companies that distribute a portion of their profits back to their shareholders, typically on a quarterly basis. Think of it like getting a regular paycheck just for owning a piece of that company. It's one of the most straightforward ways to generate passive income, because once you've bought the stock, the company, assuming it continues to pay dividends, does the rest. You're essentially partnering with established businesses and getting a share of their success. The beauty of dividend stocks, especially when you're thinking long-term, is the power of compounding. Many investors choose to reinvest their dividends automatically, buying more shares of the same stock, which then generate even more dividends. This is called a DRIP, or dividend reinvestment plan, and it can significantly accelerate the growth of your investment portfolio over time. Plus, on top of the regular income, there's also the potential for the stock's price itself to appreciate, giving you capital gains. So you're potentially getting paid in 2 ways. It's a powerful combination for building wealth steadily. However, it's not all sunshine and rainbows, and you need to be aware of the risks. Company profits can fluctuate, and in tough times, companies can cut or even suspend their dividends. Stock prices themselves are also subject to market volatility, so the value of your initial investment can go down as well as up. That's why research is absolutely key. You need to look for companies with a strong history of paying and increasing dividends, solid financials, and a good position in their industry. Diversification is also crucial. Don't put all your eggs in one dividend-paying basket. Online courses. Monetize your expertise. Next up, let's talk about creating and selling online courses. This has absolutely exploded in popularity, and for good reason. If you have expertise in a particular area, whether it's a professional skill, a hobby, a language, anything really, you can package that knowledge into an online course and sell it to a global audience. Think about it. People are always looking to learn new things, improve their skills, or solve specific problems, and they're willing to pay for well-structured, valuable content. The initial effort here is creating the course material, planning the curriculum, recording videos, creating worksheets or resources. The passive income aspect comes after the course is created and launched. Once it's live on a platform like Teachable, Udemy, Skillshare, or even your own website, it can generate sales 24/7 without you needing to actively teach each individual student. You create it once, and you can sell it hundreds or even thousands of times. The scalability here is immense. Niche markets can be particularly lucrative. Instead of a general how-to-cook course, maybe it's how to bake artisanal sourdough bread for beginners or advanced Excel for financial analysts. The more specific you are, the easier it can be to find your target audience. Now, the passive part does require a bit of an asterisk. While the sales can be passive, you'll likely need to engage in some ongoing marketing to drive traffic to your course. This could be through social media, a blog, YouTube content like this, or paid advertising. You might also need to update the course content periodically to keep it relevant. And answering student questions can take some time too. But compared to trading hours for dollars, it's a significantly more leveraged model. The upfront time investment in creating a high-quality course is substantial, but the potential long-term payoff can be absolutely fantastic. Chapter 3. Rental property, building wealth with real estate. All right, let's shift gears to something a bit more traditional, but still incredibly effective: rental property. Owning real estate and renting it out is one of the oldest forms of passive income, and it continues to be a cornerstone of wealth building for many. The concept is simple. You buy a property and tenants pay you rent, ideally covering your mortgage, property taxes, insurance, and other expenses, leaving you with a monthly profit, also known as cash flow. This is the primary passive income stream from rental properties. Beyond the monthly cash flow, there are other significant financial benefits. Over the long term, properties typically appreciate in value, meaning your asset is growing while also paying you. Plus, there are often tax advantages associated with owning rental properties, like deductions for mortgage interest, property taxes, repairs, and even depreciation, which can reduce your overall tax burden. You can invest in long-term rentals for consistent monthly income, or you could explore short-term vacation rentals through platforms like Airbnb, which can sometimes offer higher nightly rates, especially in tourist-heavy areas, though often with more active management. Of course, being a landlord isn't always a walk in the park. There's the initial capital required to purchase a property, which can be substantial. Then there are the ongoing responsibilities: finding good tenants, handling repairs and maintenance, dealing with potential vacancies, and understanding landlord-tenant laws. Many investors choose to hire a property manager to handle these day-to-day tasks, which makes the income more passive but also eats into your profits, typically 8 to 12% of the monthly rent, so you need to factor that cost in. Location is also paramount. A property in a desirable area with strong rental demand will always be a better investment. Chapter 4. Peer-to-peer lending, become the bank. Now, for something a little newer but definitely gaining traction: peer-to-peer or P2P lending. Essentially, P2P lending platforms connect borrowers directly with investors who are willing to lend them money, cutting out traditional financial institutions like banks. As an investor, you can lend small amounts of money to numerous different borrowers, and in return, you earn interest on those loans. It's a way to potentially earn higher returns than you might get from a savings account or some traditional bonds, because you're taking on a bit more risk. The process is usually quite straightforward. You sign up on a P2P lending platform like Prosper, Lending Club, or Upstart, deposit funds, and then browse through loan listings or use an automated investing tool. These platforms typically vet borrowers, assign risk grades, and set interest rates. You can often choose the risk level you're comfortable with. Lower risk loans will offer lower interest rates, while higher risk loans offer higher potential returns but also a greater chance of default. The passive income comes from the regular principal and interest payments made by the borrowers. However, the main risk with P2P lending is borrower default. If a borrower stops making payments, you could lose your invested capital for that particular loan. Unlike a bank deposit, P2P investments are not FDIC insured. That's why diversification is absolutely critical here. Instead of lending a large sum to one borrower, you spread your investment across many different loans, sometimes hundreds, in small increments. This way, if one or two loans default, the impact on your overall portfolio is minimized. It's an interesting alternative for a portion of your investment portfolio if you understand the risks and are looking for potentially higher yields. Chapter 5. Affiliate marketing, earn by recommending. Last but not least, let's talk about affiliate marketing. This is a hugely popular way to generate passive income online, especially if you already create content or have an online presence. The concept is pretty simple. You partner with businesses and promote their products or services. When someone makes a purchase through your unique affiliate link, you earn a commission. Think of it as being a commission-based salesperson, but your sales pitch can be a blog post, a YouTube video review, a social media post, or an email newsletter that works for you 24/7. The beauty of affiliate marketing is that you don't have to create your own products, manage inventory, or deal with customer service. You're essentially leveraging other companies' established products and marketing efforts. You find products or services that you genuinely use and believe in, and that would be valuable to your audience. And then you share your honest opinion and provide a link. The key here is building trust with your audience. If they trust your recommendations, they're more likely to click your links and make purchases. This isn't about just spamming links everywhere, it's about providing genuine value. The passive income potential comes from the fact that your content, once created, can continue to attract readers or viewers and generate affiliate sales for months or even years to come. A well-written blog post reviewing a popular software, for example, could rank in Google search results and drive traffic and sales long after you've published it. The startup costs are generally very low. You might just need a website or a social media platform. However, it does require consistent effort in creating high-quality content and building an audience. It's not an overnight success story, but for those willing to put in the work, it can be a very rewarding and scalable passive income stream. Chapter 6. Your journey to passive income starts now, so there you have it. 5 powerful passive income ideas for 2025 dividend stocks, online courses, rental properties, peer-to-peer lending, and affiliate marketing. Each of these has the potential to significantly boost your earnings and help you build long-term wealth. But as we've discussed, they all require different levels of upfront investment in terms of time, money, or skill. The key is to find what aligns with your interests, your current resources, and your financial goals. Don't feel like you need to do all of them. Sometimes focusing on mastering one or two is far more effective. Remember, the journey to creating meaningful passive income is a marathon, not a sprint. There will be learning curves and there might be setbacks, but the freedom and security that come with having your money work for you are incredibly rewarding. I encourage you to take what you've learned today, do some more in-depth research into the ideas that resonated most with you, and start formulating a plan. Even small steps taken consistently can lead to big results over time. The best time to start was yesterday, the next best time is today. Thanks for watching. If you found these passive income ideas helpful, don't forget to like, subscribe, and hit the notification bell for more tips on making money and achieving financial freedom. Let me know in the comments below which of these ideas you're most interested in, or if you have other passive income strategies that are working for you. I love hearing from you guys. See you in the next video.